In this video, I will do the technical analysis of Dow Jones Industrial Average Index for the week commencing from February 7, 2022. So before I do the technical analysis, I would like to tell you this. Once again, market moved exactly as predicted in the previous technical analysis. So whatever you are seeing here, the movement of the market, it is what I told you last week that exactly this is how it is going to happen. So let me so before I do the technical analysis of Dow Jones Industrial Average Index for the week commencing from February 7, 2022, let me first tell you like how the market reacted. See, this is the technical analysis of the previous week, okay? And if you see here, now comes, so see, the market is going to retrace, that's for sure. Okay, it is confirmed market is going to retrace. So now, so if you see that market struggles here, okay, around 35,120, if you see market is struggling around 35,120 and it is still below the Ichimoku, means market is failed to close above Ichimoku, which means market is going to come down. Okay, so as you have seen last week, I told you clearly, see, this is what is going to happen. This is how exactly it is going to work. And again, we will do the technical, this technical analysis in two parts. First, I will do it on the weekly chart, then I will do it on the daily chart. And this way, we will be able to reduce the most probable movement of the market as we are doing for, last many months. Okay, guys, so we are here on the weekly chart. This is the weekly chart. Okay, weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now, so let's do the technical analysis here. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market is in between lower band and the median of the Bollinger Band, which means market is clearly bearish. Then the moving averages. Market has closed below these moving averages 1, 2, 3 times, okay, which means market is clearly bearish through the moving average. But there is again this is what I'm telling you for last many weeks, many months, that there is a clear fan out in the moving averages, and this kind of fan out, it is supporting a bull market. So until and unless you see market is bearish, because these three candles, they closed, these three candles on the weekly chart closed below the moving averages. One condition. Second condition, okay, when there will be a crossover in these the moving averages and the market will be closing below these moving averages, that is a confirmed bearish, this the trend on the weekly chart. Okay, but as of now you can say yes, it is partially bearish through the moving averages. Then comes the Ichimoku, because market has closed above Ichimoku, which means the market is bullish. So only through Ichimoku on the weekly chart market is bullish. Then comes some other technical indicators. So if you look into some other these technical indicators, first comes the MACD. MACD is 198 and the signal is 374. So see, directional MACD is bearish, but the divergence between the MACD and the signal is high, or it is heavy. Okay, so this is again one of the reason, like I told you last week, that because the divergence is increasing between the MACD and the signal, which will again help the bulls. Okay, because whenever the divergence increases, so bulls comes into the picture and they try to cover this divergence in the price and the moving average. MACD is moving average convergence divergence. Okay, then comes the stock RSI. Stock RSI is clearly bearish, no doubt about that. Then comes the divergence. So divergence in the prices of the candles, okay, it is normal, it is around 50, 52. It is normal, not creating any problem. Then comes the momentum. So momentum as of now on the weekly chart is neither supporting bulls nor supporting bears. So through all of the technical indicators here on the weekly chart, it is clear, except the MS, except this the Ichimoku, it is clear that on the weekly chart it is confirmed bearish. Okay, now let's move on to the daily chart to see exactly what is going to happen on day-to-day basis, like Monday, Tuesday, Wednesday. Okay, and for the rest of the days, how the market is going to react, what will be the conditions for it to fall, what will be the condition for it to move up. So let's move on to the daily chart. Okay, so now let me write down the support and resistances here. Support and resistances are are the same as they are for last many months. So this is 36110. Okay, this is 36110. It is most important resistance here. Okay, and I've told you about this 36110 many times in my previous technical analysis. Then comes the next one. It is 35,700. It is 35,700. Then comes the next one. It is 35,425. 35,425. Then the next one, 35,115. You can say 110 or 35,110. Let's keep it simple. Then comes 34,785. 34,785. Then we have 34,530. 34,530. Then comes 34,060 or 34,050. 34,050 you can say. Then we have 33, how much it is? It is 33,580. It is 33,580. Okay, so these are the support and resistances here. So this is again very important support, 33,580. You can clearly see. Okay, then we have some these support and resistances, that again this much. Okay, sorry, this one 34,530. You can clearly see the impact of this 34,530, and then there are many other support and resistances here. Okay, anyways, so let's first do the technical analysis here on the daily chart. This is the lower band of the Bollinger Band, and this is the median of the Bollinger Band. Market is in between the lower band and the median of the Bollinger Band. Okay, which means the market is bearish. Okay, so the market is bearish through the Bollinger Band. Then comes the moving averages. So see, this thing is that because this candle is actually a spindle, or you can say this is a doji candle. So whenever a doji candle is formed, okay, a doji candle means the reversal of the market, means the market is indecisive, like what to do, whether to fall or whether to move up. So the doji candle means the market is indecisive. Okay, and generally it means the reversal of the market, but sometimes it also confirms the same trend. So whenever a doji candle is formed, it is advisable to exit your positions, because you never know what is going to happen in the market next. So see, on Monday or in the coming week, market may shoot up or market may come down. Okay, because of this particular candle, this candle that was formed here, but the chances of coming down are a little low, because this doji candle, it has closed below, sorry, it has closed just above the moving averages, but it's still the candle is in between the moving averages, so nobody knows, okay, like what is going to happen. So I will not comment, okay, whether it is bullish or whether bearish through the moving averages, because it's a doji candle and it has closed between the moving averages. Anyways, it is okay, it is done. Now comes the Ichimoku. Because the market has closed below the Ichimoku, which means the market is clearly bearish. Okay, now comes some other technical indicators. Okay, so if you look into the MACD, MACD is directionally, okay, MACD is bullish, but still the MACD is moving average divergence convergence. So now because there is very little divergence, okay, and this little divergence, it is acceptable, okay, which means that yes, chances are market may further move up. Okay, then comes the stock RSI. Stock RSI, it is marginally bearish. It is not bearish, but it is marginally bearish, because the K channel is 80 more than 80, and the D channel is more than 84, more than 84. So whenever K or D channel are above 50, means they are in the bullish zone. Then comes the divergence. So divergence in the prices of these the candles, divergence is normal, it is not creating any problem as of now. Then comes the momentum. Momentum is neither supporting bulls nor supporting bears. So as of now, there are mixed sentiments in the market. Mixed sentiments means most of the technical indicators are saying it is going down, but some technical indicators, including the MACD, okay, they are saying that it is moving up. Secondly, okay, this dilemma, it is further created by this the moving averages. So now again, no one knows whether it is going to move up or whether it is going to come down. So this is the technical analysis. Now let's deduce the movement of the market, the probable movement of the market. See, because there is a dilemma in the market, okay, and it is not clear what is going to happen next. So I would advise you to um, uh, it's better not to trade on Monday. So just wait and watch on Monday and see what is happening in the market. And if you see that market is somewhere around here, okay, again in the moving averages, okay, it is neither moving up nor coming down, or it has moved up or down, but again it closed between the moving averages, then wait for Tuesday. So until and unless you do not get a clear direction here in the market, do not trade in the market. Okay. Now, other than this, see, market is not bullish until and unless market moves up, okay, and closes above the Ichimoku two consecutive candles. Two consecutive. We need two consecutive candles. So first of all, market has to clear this particular zone, this particular heavy zone. Okay. So whenever you see market has closed above the Ichimoku on two consecutive candles, okay, then yes, you can expect the market is now bullish and the market is now going to move up. Other than that, if you see market is coming down, okay, and if you see that market, see one more thing here. Here comes the 200-day moving average. Okay, this is the 200-day moving average, the same as happened on the in case of S&P 500. Okay, so in my technical analysis of S&P 500, I told you that see, this is the same thing there. Now here, if it fails to close above the Ichimoku, in that case market is going to come down, as simple as that. Okay, now this time whenever it comes down, whenever it closes below 200-day moving averages, two consecutive candles, then it will be further coming down, means below 33,580, means you can expect it to hit 33,000 or 32,000, okay, in next 1 month. So this is what is expected to happen in the market. So you just need to wait for the market to clear this particular zone, okay, this particular price level, or even more particularly this one. Okay, so when the price when this particular range is clear, okay, then only you can trade in the market. Secondly, do not forget that that the earning season is still going on. Okay, so some more companies are supposed to post their earnings, okay, particularly from Dow Jones. So you should also consider that part into the account. Means for example, if one company posts some very good earnings, in that case it will help the Dow to move up. And if someone posts very bad earnings, in that case you can see that nowadays stocks are tanking like 25% or 30%. Okay, so guys, I have given the link to my Discord spreadsheet in the description of the video, so you can take a look, and whenever you are ready to join the group, you can just drop me an email. So this was my technical analysis for this the Dow Jones Industrial Average Index for the week commencing from February 7, 2022.